In this week's analysis, we're talking about gold and silver. So I'll be covering two charts, and those two charts are gold and silver. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you haven't gotten my free chart pattern playbook yet to help you spot solid trade opportunities, use the link in the description below or the pinned comment to get that book. It's totally free. Starting with gold chart on the 4 hours time frame, what you can see is we've been in this massive bullish trend for the past few years now, and we made an attempt to continue going higher, but we had a flash crash. So this massive red candle over here, right? So if you take a look at this trend line, it almost feels like this is a bearish continuation, right? After the consolidation of this price action, creating a symmetrical triangle. So going down to the 1 hour time frame, so this is clearly visible. You can tell that this is a symmetrical triangle, and as you know, symmetrical triangle has no defined direction when it comes to breakout. So you only trade in the direction of the breakout, right? So ideally, we hoped, or I hope, that this would have, given us a bearish breakout to the downside in continuation of this massive bearish move over here. But that may still happen, right? But at the moment, we've had a bullish breakout to the upside, which coincides with the current trend, right? So that's the reason why trend lines sometimes can be deceiving, because if you're relying on a trend line, we may get this breakout, and you may feel a consolidation may lead to a continuation of this bearish move. But so far, as it seems, it feels like that's the opposite. And this trend line right now seems to be, irrelevant, right? Because if we continue to grind higher, so there's a good chance we go higher like this and like this. So if this was moving naturally, I would have expected maybe a move up like this, then downwards to the downside. But with the current geopolitical tension in the Middle East between the United States and Iran, I think there's a good chance gold rallies higher, right? Even going above this trend line, right? So you may also watch out for this trend line for a retest, so something like this, then a reversal to the downside, right? But we have to wait till we get here before we see how the market reacts with this trend line. But for now, if you pull up the moving averages, right, so 200 EMA, 200 SMA on the 4 hours time frame, you can clearly see that we've bounced up this moving average using it as an area of support, which also gives me enough reason to think that this trend line is invalid at the moment, right? Because the tension is growing stronger and more intense in the Middle East, right? And if you can see on the 4 hours time frame, the price has just used this moving averages as a very solid area of support. Besides this price here, we have this flash dump and a quick reversal back above this moving averages. So right now, you can see last week we had a move into these moving averages, we bounced off, consolidated, and now on the 4 hours time frame, it even looks cleaner and clearer that we're likely gonna keep riding higher till maybe the tension in the Middle East eases, right? So that's why for me this week I'm gonna be bullish on gold. I'm already in on one position on gold from last week, right? But I'm gonna wait to see if we take out this area of resistance. So we have a very good area of resistance over here, which is our last, defense. The last defense probably going to prevent gold from going higher if it does, which also aligns with the moving averages on the 1 hour time frame, right? So if we come into this area of value, consolidate, and get another bullish breakout to the upside, then this could be a very good opportunity for you to go long if you're currently not in on gold yet, right? So entry is going to be immediately after the breakout, followed by consolidation. Then stop loss can be placed underneath that consolidation, and your first take profit target could be as high as here, while you ride the rest of the positions as we go higher, possibly to new highs, right? So this is it briefly for gold. It's pretty straightforward for me. I'm already in on a position here, so I'm going to go in more, so open more positions. If we get a move into this area of resistance, consolidate a little, and get a bullish breakout to the upside. But we may not get the opportunity to see all this unfold, right? Because there's a very good chance the price of gold opens with a solid gap when the market opens. It's been like that for the past few months now. You can see over here, nice gap jump to the upside. Over here, nice gap jump to the upside. And so many other cases all over the chart, right? So I don't think this week is going to be any different. We may likely just open up with a huge gap, moving higher because of the intensity of the war in the Middle East. But if we don't open with a gap, things move more naturally when the market opens. Then you want to watch out for a consolidation like this, followed by a good breakout for you to go long. That's it briefly for gold. Moving on, talking about silver. So just a quick reminder, my chart pattern playbook is totally free. It's going to help you spot high probability setup, market structure, and all that. Use the link in the pinned comment or description below to get a book for free. So lastly, we're talking about silver, right? So silver, similar to what we have on gold, but this seems to be in a more broader consolidation, right? Massive move to the upside, flash dump, consolidation, good breakout. And what I see right now is a retest of this area of value, consolidation, and a good chance that we may be heading higher in continuation of the overall trend, right? We've had over the past few months or few years. So right now, I'm watching out for something similar to gold, but the thing is, I'm not currently on silver yet. So when the market opens, I may likely jump in if I get the opportunity to go in, right? But if you want to be conservative with this, I would watch out for a good breakout above this area of value first before attempting to go long, because there's a good chance we pop up into this area of value, consolidate, or drop back down before we eventually go higher, right? So that's the reason why the safest place to go long right now will be wait for price to come into this price level, maybe consolidate a little, then give us a good break above, then that could be your confirmation to go long. Entering after the breakout here, stop loss underneath the consolidation, at least a breakout. Take profit target, first one can be as high as these price levels, and the second one can be as high as this area of liquidity over here, and you can ride the rest of the positions as we go higher. So similar to gold, but silver tends to wait for more confirmation before we go long. At least when we start trading above this area of value, then we can consider going long in continuation of the overall trend, right? And this is also affected by the tensions in the Middle East. That's it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. And if you haven't gotten that book yet, it's going to help you a lot. Do get a book. See you next week.